Hi, Jeff Higley with HotelNewsNow.com here at the Marriott Marquis in Atlanta. We're here at the Hunter Investment Conference, and with me is Jeff Colasar, the Senior Vice President of Development for GF Management. Jeff, thanks for taking the time to join us.
Thanks for having me, Jeff.
First of all, give us a little bit of an insight to your company. Where are you at property-wise? What do you do, and how do you see the environment shaping up as of March 7th, 2011?
Great. Well, actually, GF Management, we're a hotel management company based in Philadelphia, Pennsylvania, which is where our headquarters are located. We are a hotel company that owns hotels, we manage hotels, and a large portion of our portfolio today is working on the distressed hotels on behalf of special servicers, financial institutions.
So those do you consider those short-term deals, or do those tend to be longer term in this kind of environment?
Certainly they're shorter term projects, and it really varies on the client or the institution that we're working on behalf of, whether they want to try to get rid of the property very, very quickly, or they want to hold it and sell it in a when we're able to create some value with the properties. We if we're dealing with a bank property or a third party, we treat it as if it's our own property. So strategically, we put together a strategic plan in terms of, okay, are we going to own this property 6 months? Are we going to hold it for 12 months? Are we going to hold it for 3 years? So we strategically put a plan in place.
Dealing with a lot of these distressed properties from the banks, do you see a recovery? Are we in the early stages, or has it started yet?
I think if you look at the overall, what everybody gauges in the industry is RevPAR increases, and you're naturally seeing the increases year over year. But I always say, if you take out some of the top 10 MSAs again in terms of the New Yorks of the world, and you said, okay, what's the rest of the industry doing, or what are the other top 15 MSAs doing? And I'd have to say you're probably looking at, not the double-digit returns. You're probably somewhere around 5 or 6 when you carve out the larger top 10 MSAs.
Where do you see 2011, 2012, 2013 going for your company?
We took over 73 hotels in 2010. We're anticipating that we will take over, whether it's third-party managed and/or on the bank side. We think we're going to project between 80 and 100 transactions this year. So we see continued growth this year. From the other side of our business development, we've grown our acquisitions team within our company. So we're starting to look at deals from an acquisition standpoint. So we don't want to be left where we go from 117 hotels down to 40 hotels again. We want to make sure we stabilize somewhere. Probably around 80 hotels is a good sized company. I'd love to say that we can keep it in the 100+ area, but I think we're realistic in terms of our goals, in terms of where we're at.
So you clearly deal with a lot of banks. Yes. What's your take on the whole situation regarding banks putting hotels out on the market? Do you think there's going to be a flood of hotels for sale through the banks or by the banks at some point?
We're seeing more and more hotels, I believe, this year from those, I call them servicing shops, have come to the market most recently. But what's changed things in the last 12 months and even in the last 3 to 6 months has been the note sale process, where these financial institutions are saying, I don't want to deal with this issue. It may be especially on some of the smaller assets where it's the loan or the perceived value of the hotel may only be worth $3 or $4 million, rather than take the property back, deal with the PIP issues, deal with a negative cash flow of a particular property. What they'd rather do is say, I'll take my hits now, sell the loan at a discount, through an auction process and/or individually through some of the folks out there that market the loans.
All right, Jeff Colasar from GF Management, thanks so much for taking the time.
Thanks, Jeff.